Welcome back. I'm Pratap here. Today is 26th December 2023. If this is your first video at our YouTube channel, please understand we are providing free training on supply demand zone price action course. You can access this course from our YouTube channel by clicking this home page and then scroll down to the playlist supply demand zone price action course. Just click on this playlist and all the lessons starting from lesson 1.1 until the most recent lesson is available. Even all the upcoming future lessons also will be placed under this playlist. So please go through this course and it will be useful to you. Let's get into our discussion. So even before that, I'm going to make a separate video on question and answers, our third question and answer video. And all these are all questions you've been asked for the last 1 week. And especially the seventh question I will be addressing in this video. Because today we have a stock ICICI GI, and this question is relevant to that particular trade performed in today's trading session. So basically the question is, we will fine tune the zone. So like daily zone to 75 minutes, 75 minutes to 15, and 15 to 5 minutes. This is the way we will fine tune. And this particular question is they asked about by bypassing 75 minutes time frame, directly can we consider 15 minute zone? Can we do that? In general, we don't do that. But there are some special cases we can consider. So I will show you that example. This is ICICI GI is the best example to answer this question. And remaining all the questions I will be addressing in our Q&A video, that I will make a separate video after this particular analysis video. So Nifty is still inside daily zone, daily supply zone. Okay, let's get into the high liquidity zones generated in our last report, in our last video. On Friday, we identified high liquidity zones, 6 high liquidity zones. The first one is a daily high liquidity zone, Bandhan Bank. So the prices did not enter into this zone. So there is a strong order flow somewhere here. Within this area, there is a strong order flow. Let me draw one more line. So most of the times, the prices are reaching and see the rejections from here. Maybe this area is acting as an entry buffer, but it's entry buffer generally, it should be close to the zone, but it is a little far away from this zone, so I am not considering this area as entry buffer. There could be some other reason. Maybe there could be a lower time frame zone might be there. Before that, maybe there could be entry buffer to that. But anyway, I'm not getting into these details because prices are not near to our high liquidity demand zone. So we didn't get entry. The second one is Apollo Hospitals. Apollo Hospitals, previously we got a trade, but I am not considering the fine-tuned area. This is the one we previously got this trade. So this is no more valid. The reason is already prices moved deep inside this. This is already tested. This is the fine-tuned 5 minutes or 15 minutes zone. Prices already moved deep inside. So that's why this zone is not considered. And moreover, prices entered into this zone today almost at the closing hour of the market. So except this, we haven't identified any fresh 75-minute zone inside this daily zone. So that is the reason why this stock is not a valid stock for trading purpose. Because always we have to look for a fresh 75-minute zone inside this. But this 75-minute zone already tested. Tested means the fine-tuned area. Generally we look for, it should be tested at our fine-tuned area. A fine-tuned area is already tested previously. So that's why it is not a valid stock. And next one is Ashok Leyland. So prices entered into this daily supply zone. Inside we fine-tune to 75 minutes area. Inside 75 minutes, we fine-tune to 15 minutes or 5 minutes area. So prices again did not enter into this zone. So we didn't, what I mean is this zone is not triggered. I mean entry is not triggered. The next one is Astral. This is a 75 minutes zone. Sorry, this is also a daily zone, daily high liquidity zone. We have a drop, 2 base candles drop. Inside we fine tune to 75 minute zone. And this 75 minute zone is already tested previously. See, prices went deep inside and haven't found any, again a new fresh zone inside this. If I want to look for any other zone inside, couldn't see any proper, maybe even if you consider this candle as a base candle, the next one is also again a small candle. It is not a leg candle. It is also a narrow range candle. Even if you consider this, everything comes like this. So which is not convincing a zone. So that is the reason why I haven't considered this zone. But the one which we already fine-tuned is already tested. Anyway, today prices did not enter into this zone. And next one is ICICI. This is the one we have to ask. We need to focus. This is a 75 minute zone, supply zone. Sorry, this is also a daily zone, not 75 minutes. Inside we fine tune. We have a drop, 2 base candles and a drop. This is a daily high liquidity zone. And inside we identified a 75 minute zone. We have a drop, 2 base candles and a drop. So inside this 75 minutes, we fine tune to 15 minute zone. How we fine tune? Something like this. We have a drop candle, 2 base candles and again a drop candle as a leg out. So that's why between these 2 base candles, we have drawn the zone. This is the fine-tuned 75 minute zone. But just below that, just below this 75 minutes, inside 75 minutes, we fine-tune to 15 minutes or 5 minutes. But below that, there is one more 5 minute zone. This 5 minute zone is not inside 75 minute zone. This this is 15 minute zone. This 15 minute zone is not inside 75 minute zone. And moreover, this 15 minute zone is inside the daily high liquidity zone. So previously someone asked this question. Let me show you the question. While analyzing some chart, I observed a 15 minute supply zone within the daily supply zone. Directly jumped into 15 minute supply zone inside daily zone. And there was no 75 minute supply zone. That means the 15 minutes zone is not having confluence with 75 minute zone. What is zone confluence? Anyway, this topic you will be learning in the second phase of our training program. If you have a zone, inside the zone you have one more zone. If a zone inside another zone, you call it as LOTL, right? Level on the top of the level, LOTL. But both zones should be in the same time frame, you call it as LOTL. But here, if both the zones are different time frames, one zone is a daily zone and another zone is 15 minute zone. That is called zone confluence. That concept is called zone confluence. So what is his question? The 15-minute zone is in confluence with daily zone, but not in confluence with the 75-minute zone, which is confluence with daily. Look here, I will show you the zone confluence example clearly. Here we have a daily supply zone. Inside daily supply zone, we have a 75-minute supply zone. This is called zone confluence. Again, within this 75 minutes, we have a 15-minute zone. So this is the 15-minute zone in confluence with 75-minute zone. See, confluence need not be exactly inside. It can overlap with either distal line or proximal line. That means either zone high or zone low, it can overlap. What is overlap? One part is inside the zone and another part is outside the zone. That is also zone confluence. Similar to LOTL, but LOTL is within the same time frame. Zone confluence is with different time frames. Okay, see here, look into this 15-minute zone. This 15-minute zone is in confluence with 75 minutes time frame. 75 minutes time frame is in confluence with daily time frame. This is one scenario. Now, second scenario, look into this. There is second 15-minute zone. This is the first 15-minute zone, which is inside 75 minutes, which is inside daily. Look into the second 15-minute zone. This second 15-minute zone is not inside the 75-minute zone. This second 15-minute zone is directly inside the daily zone. So if this 15-minute zone is directly confluence with daily zone, directly confluence without any 75-minute zone, that is what his question. Let me read his question again. I observed a 15-minute supply zone within daily supply zone and there was no 75-minute supply zone. In such situation, is it permitted to trade with 15-minute supply zone? Already we discussed this point earlier in some of our earlier videos. Those videos are available under the playlist NeoStock terminology. We have discussed in several videos this point, but a few videos I have added in the terminology for our reference purpose. Previously, what is that answer I have given? In general, the answer is no. You cannot take trade. And I also given one more possibility, that is special scenarios. In special scenarios, you can take trade. Just bypassing the 75 minutes, directly 15 minutes inside the daily, you can take trade. But they are the special scenarios. Those scenarios we named as aggressive trade. The trade is aggressive trade. Why aggressive? Because we bypassed 75 minutes. Directly we jumped into 15 minutes inside daily high liquidity zone. Because you bypassed one time frame, say I am using the word, because you bypassed one time frame above. Actually we bypassed one time frame above. This 15 minutes is supposed to be inside 75 minutes. But we bypassed it, one time frame. And jumping one more time frame above. What is one more time frame? Daily. So 15 minutes is in directly confluence with daily without 75 minutes confluence. Then such kind of trades are called aggressive trades. Aggressive trades should be taken only in some special scenarios. There are few special scenarios I explained earlier. If you look into NeoStock terminology playlist, in that you will find aggressive trade with the heading aggressive trade, you will find one or two videos in that. There I explain. But today also we will explain the situation. So one of the reasons when you can accept aggressive trade is if there are some price action clues. What are some price action clues? Here one of the price action clue we are observing here. There are different price action clues. One of the price action clue we are observing here is rejections. Just before prices are entering into this zone, there will be some rejection. See here, we have a drop, base, a drop. After that, again prices are started moving up. They were very close to this zone, not very close, but considerable level. They were close to the zone, and before entering into the zone, there is a rejection, and then prices came down. Why? What could be the reason? The reason is there could be a heavy order flow before this zone. Maybe somewhere here till the zone or till the distal line of the zone, there could be heavy order flow. Sometimes the order flow is from where the rejection started, from there to somewhere in the middle of this zone, some order flow they might have kept institutions. See, order flow will be there till the distal line, but here it is a strong order flow. The question is strong order flow. Because there is a strong order flow, they already kept some orders there, but they are not visible as per our demand and supply zone. But they are visible to you as per the price action clue rejection. So this rejection before this zone indicating there is a strong order flow. You may ask a question, can we consider this price action clue for any zone? You can consider, but I don't know how strong the order flow is going to be. But here we are considering there is a strong order flow because this daily zone itself is a high liquidity zone. Inside high liquidity zone, we know there is a heavy order flow. And inside the high liquidity zone, if you are looking into such kind of rejections, at least there is some guarantee that there is a strong order flow. In such kind of situation, when a clue is there, when a price action clue is there, then you can consider that zone by bypassing the 75-minute zone. See here, this 15 minutes is not inside the 75 minutes. It is inside the high liquidity zone. But what is the guarantee? Inside the high liquidity, inside 75 minutes, inside daily high liquidity, there is a 75 minutes. Inside 75 minutes, there is a 15 minutes. There the actual order flow will be there. That is one strong belief for our theory. And that belief is working very well. We've been seeing for the last 3 months how our trades are getting executed. But other than this, by bypassing, how strong this zone is going to be, this 15-minute zone, that we can't give guarantee. But we can give guarantee when there are price action clues like this. And you will get better clarity on this price action clue when you go to the 5 minutes time frame. Now let me show you this 15 minutes, which is not inside 75 minutes, but it is inside daily. Let us look into that 15-minute zone. And we will fine tune that 15-minute zone in 5 minutes. Why we are looking into the 5 minutes? One is to understand the structure. See, in the 5 minutes we have a drop candle, 2 base candles. Further you can fine tune like this. Drop, base, drop. That way you can consider this zone is strong. Or still you want, if you want to consider, you can consider as a 15 minutes if you want to bear the risk. If you are not in a position to bear the risk, you just reduce the risk. Drop, base, drop. Now see here previously what happened? Prices were nearing to this zone. Just before entering into the zone, we have seen the rejection. This is the first rejection. Next time prices went little deep, then came down. That means next time some more pending orders are executed, but because our pending orders are very strong and it couldn't penetrate more deep, but pushed the prices down. But when you want to take the trade, when prices are just about to enter into this zone, we want to take the trade. By the time some more pending orders, strong pending orders will be consumed, that means by the time prices are entering into this supply zone, the demand will be weakened. Once the demand is weakened, what will happen? Supply will push the prices down very fast. That is what happened today. See today what happened? A little above, some more deep, that is close to this zone, almost reached the proximal line. When prices are about to reach this proximal line, again from there it is started moving down and reached the 15 minutes target. Why 15 minutes target? Because this is a high liquidity zone. This entire daily is a high liquidity zone. Wherever the order flow is there, the order flow will definitely push the prices till the next 15-minute zone. Even though you are taking trade in the 5 minutes. Actually, we are not taking trade in the 5 minutes. We are taking trade in the 15-minute zone, but we fine tune to the 5 minutes level. But 15 minutes to 15 minutes target generally you will achieve in 2 to 3 days. But the same thing you are getting in the intraday itself. Now look into the 15 minutes time frame. See, today prices reached the 15 minutes. Even prices came even below this. The next 15 minutes level target also it reached. But we are not considering this because always we consider the immediately available 15 minute zone. See, our target, maybe we can say this is the second level target. If you are very sure this 15-minute zone will be violated and you want to take a risk and you can consider up to this. So that is possible. Because someone asked a question here about trailing stop loss. Can you please throw some light on trailing stop loss method for trading? That is one example. Suppose if you are very sure this zone will be violated, then use the trailing stop loss. What is trailing stop loss? Prices entered here, but you have a doubt whether I want to book my profit or you want to wait for some more time. So what you can do, you can go to the 5 minutes time frame. Look for the 5-minute supply zone. See here, let me show you. Here I'm explaining about trailing stop loss. Supply zone. This is 5-minute supply zone. And look into the next 5-minute supply zone. And look into the next 5-minute supply zone again. See, what is that trailing stop loss is suggesting? Actually, instead of booking your profit at this, even one more thing I have to draw. Here one more. See here, the prices are moving down by keep on creating supply zones. This is the first supply zone created. This is the next prices entered into your target. But you are having confidence that prices will move further and it will violate. So you might think, why I want to miss my profit by booking here. You may get some more profit. So forward what you are doing, you keep on drawing the 5-minute zones. Is any of these zones are violated? No. When is the first 5-minute zone is violated? Here there is another possibility. Still some more, even this zone also will be violated. Even further prices will go down. That possibility is also there. So that's why whichever the first supply zone, 5-minute supply zone is going to be violated, there you want to exit your trade. There you want to exit your trade. Actually, I may consider this is also one more supply zone. So you have a drop candle, you have 1, 2, 3, 4, and this is again you can consider a leg out candle, ERC candle. That way you can consider draw one more supply zone here also. And see, this is the first supply zone is violated. The moment this supply zone digital line is broken, now you book your profit. See, instead of you book your profit, let me draw the blue color line. Instead you book your profit here. Now what you did, you booked your profit here. I have drawn a little above to bring clarity. At least you can able to see this line. See, you are supposed to book your profit at this first blue color line. Now, by using trailing stop loss, what you are doing, you are keep on drawing these 5-minute supply zones, and when you will do this trailing after reaching your target, first target, may assume this is your first target. There are two possibilities. From here, prices will bounce back again, it will move up. But you have a confidence that prices will further go down. At the time, if prices go up and break this immediately available supply zone, at this proximal line, when it is violated, sorry, not proximal line, distal line. When this distal line is prices, when this supply zone breaches at the distal line, just when prices are going above this distal line, at the time you will exit from your trade. That means you booked out a profit. Okay, now you may ask a question. Now our profit margin will be reduced. Yes, it will be reduced because you have confidence that it will go down. But it didn't happen. Prices moved from here itself. At the time your profit margin will be reduced a little. But you are in a position to take that risk. You are willing to accept. But look into this scenario. In this scenario, is the supply zone is violated? No. Prices moved further down. Again moved further down. Okay, now prices entered into the supply zone. Still, zone violation is not happened here. It tested, the supply zone is tested, again further went down. Again another supply zone is created here. Now another supply zone is created here. Now the supply zone is violated in this candle, in this green candle. Right? There is a leg out. Now we already drawn a blue color line. Say let us assume there you exited from your trade. See, now you got more profit. This is the extra profit you got now. Let me draw the info line. You are supposed to exit from here. See, now you got 9 rupees 60 paisa extra profit, another 0.68% extra profit you got from your trade by using the concept trailing stop loss. But you should be very careful when you are using this concept. If your reward is very small, don't take risks. The reward is very good. See, today it has given a very good profit. So by using trailing stop loss, instead of booking your profit, you booked your profit at this blue color, the second blue color line. So that you got an additional profit of 9 rupees 60 paisa. The lot size ICICI is 500 into 500. You would have got another 4,800 rupees extra profit by using this trailing stop loss. ICICI has given, already it has given a profit 11,075 rupees, which is 8.82% return on the investment. Now if you add this 4,800 rupees, you would have got 15,875 rupees, you would have got the profit. Instead of 11,075, you would have got 15,875 rupees profit you would have got by implementing this trailing stop loss concept. Trailing stop loss you can use not only for not only as a stop loss, you can also use it for booking the profits also. See, stop loss concept can be used for exiting the trade when your trades are against your expectations, or even stop loss concept also you can use for booking the profit also. And trailing stop loss, you are keep on moving your levels, your profit levels or loss levels, and then you will take a decision. But in supply and demand zone, trailing stop loss concept is very useful in profit booking, especially in profit booking. And some people also use a trailing stop loss for taking entries also. Where to take entry. But that is not for supply and demand zone traders. Those people who use indicators, they will use trailing stop loss for taking their entry, where to take the entry in the market, as per that indicator rules and other price action clues. But in supply and demand zone, trailing stop loss is popularly used concept for profit booking, because entry and stop loss are very clear in supply and demand zone. Your entry is clear and your stop loss is very, very clear. So you need not go for trailing stop loss concept for that purpose. As per supply and demand zone, it's not valid but it is valid for profit booking. See the example I have explained today. How we booked the profit. Extra profit, another 4,000, how much? 4,800, right? Yeah, another 4,800 rupees profit you would have got in case if you would have used trailing stop loss. Especially this is the question for asked about. Can you please throw some light? Fourth question. So that means fourth question and seventh question both we discussed for this stock. So what I do is I will also combine remaining question and answers also in this video instead of making a separate video, because two major topics already we discussed here. So I think making another video, separate video doesn't make any sense. Initially I thought of making a separate video. Hope you understand. In case if you have any confusion, again repeat this. Whatever the explanation I have given, please repeat once again. You will understand. And next stock is Bank of Baroda. It is a 75-minute stock. Here we have fine-tuned the 15. This is 75 minutes is fine-tuned to 15 minutes. This is the only fresh 15 minutes is available at present. We have a rally, two base candles and a drop follow-through candle. Why I am focusing on the follow-through candle? Because this leg out is not very great. At the time always I look for the next candle to confirm this zone. You may ask a question, can't we draw a zone here? Yes, you can draw, but it is already tested previously. So that's why this zone is no more valid now. Previously it was tested. Previously means when this is on Friday, last Friday, this zone is already tested. That's why we didn't consider this. It's not valid anymore. So prices directly. But prices did not reach the fine-tuned area. That way we didn't get the trade. Today we got only one trade, that is ICICI GI, that too an aggressive trade. Today we got an aggressive trade. So before I generate, let me look into the other questions also. The first question, the zones which did not reach the 15 minutes entry point, are they still valid? Can I take a trade from them even after 2 or 3 days? Okay, so what I understood is, see, for example, look into this. Price did not reach this. So today this zone is missed. Now his question is, after 2 or 3 days, prices are entering into this zone. Can we take a trade? My advice is don't take trades. The reason is the volatility conditions will be changed. I clearly told several times, all the volatility conditions will be considered by our algorithm that finds stocks near demand and supply zones. Not only volatility conditions, even there is another concept called entry buffer. which I introduced for NeoStock software development purpose. It is not the entry buffer for your trading purpose. Generally in the trading, you give 0.1% or 0.2% buffer for taking the entries. I'm not talking about that. Entry buffer is a concept related to demand and supply zones. So all those concepts are integrated in the algorithm. By considering all these factors and calculating the volatility in that particular stock by end of that particular day, so that next day same volatility conditions will be applied next time when the market starts in the morning session. At least in majority of the situations, those calculated values in the algorithm will be valid. That's why we got a huge success for high liquidity zones. After 2 or 3 days, we never know how all these volatility conditions, if all the volatility conditions and the other concepts implemented in the algorithm, if they satisfy, once again same stock will be listed in our software. Before that day, our software will list stock near demand and supply zones. If it is not listed, means software algorithm can't give guarantee to you how that particular stock is going to work. So that is the reason why whatever the stocks near demand and supply zones, they are valid only on the next trading day. You can't take after 2 days or 3 days. But few stocks you can consider by special conditions. But you don't have the knowledge about those special conditions because you didn't develop the algorithm, so the software algorithm, so you may not be having that knowledge. So you can't take a decision which stock really work or doesn't work, even though it is not displayed in our software reports. That is stock near demand and supply zone reports. If the stock is not displayed, but still is it going to work or not, you are not in a position to identify. At least I can able to identify because I am the person who developed all these algorithms. So by considering all those things, at least I can take some human judgment, I can take at least. Even I can't say, take accurate decisions for sometimes. But some extent I am in a position to identify. But you guys are not having that knowledge. And it is not possible for you to identify such kind of stocks, whether really they work or not. That is the reason why I am telling you, better avoid the stocks. So for example, you look into this stock, you missed the trade today. So can you take tomorrow the same zone? If suppose prices reaches here, can I take a trade? My question is, don't take. You can't give guarantee tomorrow it will work or not unless in today's report the same stock is displays. What is this stock? Bank of Baroda. If Bank of Baroda displays on the 75 minutes time frame, this is the 75 minutes time frame zone. In today, if it displays in our, because in next few minutes we will be generating the reports. In that report, if it displays, you can consider. If it does not display, you cannot consider this stock for our tomorrow's trade. Even if you consider, we can't give guarantee whether it will work or not. But if you want to consider tomorrow, then you have to consider as per your demand and supply zone theory, complete theory. What is complete theory is saying? What is the trend? What is the location? If everything is in favor, trend is in your favor, location is in your favor, then tomorrow you can trade as per our normal supply and demand zone trading point of view. But at the time you can't target for 15 minutes time frame target. You cannot. Your target should be only 5 minutes. Immediately available demand zone only going to be your target. But not the 15 minutes available target. So you have to, by considering that factors, you can take a trade. Actually what we are doing in the high liquidity zones, especially stocks near demand and supply zones, we are ignoring the location. You are ignoring the trend. And you are focusing only on the intraday trade. Please remember, you are focusing only on the intraday trade, but the target is 15 minutes. Even by ignoring the trend, even against the trend, intraday it is giving you the, at least the target is getting reached. Even it is against the trend. even against the location. What is location? Your curve. Suppose it is high on the curve, but the zone is a demand zone. Still you are taking trade if it is a high liquidity zone. Even high on the curve, even it is a demand zone. Even trend is a downtrend. That means your location or curve is not in your favor. The trend is not in your favor. Still you are taking trade. But that trade works only for the during the intraday, at least to reach the target up to 15 minutes. The 15 minutes. Like this we have seen many stocks. You have seen previously also, I have given some headings also. What is that? Long trades on a bearish day. And short trades on a bullish day. It worked for us. Nifty was down around 250 points or close to 270 or 280 points down. But still, your demand zone is working very well. Nifty is down, but your high liquidity demand zone gave the profits. Similarly, you have seen, even recently also, Nifty is around 260, 270 points up. But that day your supply zones has given excellent return to you. So again is the overall market trend, our zones are giving results. Or again is the trend of that particular stock, it is giving the result. Against even the location in that stock, still it is giving the result. If the stock is in the high liquidity zone. So that is the reason why, as per this algorithm, you should be very careful. If the stock's near demand and supply zone only, you have to focus only on the next day. One day after, 2 days after, you cannot focus. I can focus because I know which stocks will work, which stocks doesn't work. But anyway, you have good number of stocks with you. Majority of the days you are getting a trade. We are publishing, suppose in a week, in a month, we are publishing 22 working days are there. So 22 days I am publishing the results. Out of 22, at least 17 days you are getting trades. Immediately the next day. In between maybe some few days before the holidays or such kind of situations, the volatility in the market is very, very less. That day prices are not reaching up to your stocks near demand zones or supply zones. They are not reaching to the zone level. That way we miss some trades. But at least we are getting, remaining days we are getting the trades. At least out of 22 days in a month, at least 15 to 16 days we are getting one of the zones, either daily zones or 75-minute zones. We are getting the entry. We are getting the entry. Once you get the entry, there are two possibilities. Either we get the profit or we get the losses. There are few days you get losses also. But losses are very minimal loss, and moreover probability of getting the loss also we have seen very less compared to the profits. And when you get the profits are reaching up to the 15 minutes demand zones. At least more than 80% stocks, 80 to 90% stocks, targets are reaching 15%. Maybe in less than 20% or 15%. Stocks are unable to reach the 15 minutes level. Maybe before itself we are revising our targets and booking the profits at the revised targets. So that's why, by considering all these statistics, I am strongly suggesting you, do not take trade after 2 days or 3 days. You have to take only next day only. If today you missed anything, forget the report. Now whatever the latest report I am generating, focus only on that latest report. Whatever the stocks you are getting from the yesterday, you have to forget today after the end of the trading hours. Today at the end of the day, the evening at 6 o'clock or 7 o'clock, whatever I am recording this video, In that video, whatever the list is there, that list only you have to focus for tomorrow's trading. This is a strict rule you have to follow. And next question, which kind of zone you consider as a high liquidity zone? Can you make a specific video? Already I made videos on this, several videos. Few videos I added in the playlist, NeoStock terminology. So this is the playlist, terminology of NeoStock supply demand zone reports. So if you go through these videos, I have given previously. Go through this list. Here, NeoStock high liquidity zones in our overview. This video is only about, we have different types of high liquidity zones, around 5 or 6 types are there. We are focusing only on 3 types. Remaining are, we are ignoring because you are not aware of those concepts, and when you have to use them, you don't have the clarity. When to use or when not to use, you don't have the clarity. So we are ignoring only first 3 types. I have explained each and every type in this particular. Go through this video, NeoStock high liquidity zones overview. But how to trade by using NeoStock high liquidity zones? That I explained in one of these videos. Entry buffers, I think someone asked about entry buffer. This is the video you have to refer, dynamic entry buffer. See, HLQ demand zone versus bearish day. This is what I told. On a bearish day, our demand zones worked very well, even though market is going down. See, here I explained how to trade HLQ demand or supply zones. Go through this video on 1st November. And aggressive trades. Here I explained. Aggressive trades are not the zones inside directly inside 75 minutes. You can bypass 75 minutes and you can take trade in 15 minutes. That is 15 minutes versus directly the daily high liquidity zone. So go through this list, the videos in this list. So you will get clarity. Look into this playlist, terminology of NeoStock supply demand zone reports. Go through it. Same for your question also, the same answer. I can't understand what is high liquidity zones. Have you made any specific video? So just now I answered this question. So for both these questions, the answer is same. Next question, can you please throw some light on trailing this we already discussed. Wipro weekly supply zone, you have to find it. If you want, you know how to draw zones, right? If you are unable to find a supply zone, there are 2 reasons. So reason number 1, maybe you didn't learn the concept properly. Then go through our training videos. You will understand. You learned, but you are not able to find Wipro weekly zone supply zone. That means it is Wipro is at all-time high. Maybe you have only demand zone. You don't have a supply zone. In that situation, some stocks are not having any supply zones. You already know. When a stock is not having supply zone, if it is all-time high zones, the demand zones are at all-time high, you won't find supply zones. Just go through this. See, I don't want to show you what is the demand zone, what is the supply zone for the stock you are having some interest. I don't want to show you in every day. The reason is, I want you people to identify these zones. You should be in a position to identify where is supply zone, where is demand zone. That's why the training program will help you. If I am started showing you by drawing whatever the stock you are requesting, then how you will learn the subject? All of a sudden, just assume, all of a sudden I got irritation. I decided to go away from our channel. What will happen on that day? Who will identify your demand zones and supply zones? It is you. You have to identify demand and supply zones for every stock. That is the main goal of what to say. That is the main motive of our channel. Here the motive of our YouTube channel is you should be self-independent in terms of building the knowledge, in terms of identifying the trades. See, am I showing you the trades? Am I telling you where to buy and what is the entry, what is the stop loss, what is the target? No. I'm just giving you high liquidity zones, that's it. After that, you are fine-tuning those zones. You are fine-tuning 75 minutes. Inside 75 minutes, you are fine-tuning to 15 minutes. I want everyone should build that knowledge. But to build the knowledge, you need to get training. To get the training, you need to pay lakhs of rupees for getting the training. That way I want to save your money. That's why I decided to provide free training to you. Because everybody is not in a position to pay 1 lakh rupees or 1.5 lakh rupees or 2 lakhs rupees spending your money learning these courses. Many of you are not in that position. That's why I'm providing the training, complete training. Each and everything I know I'm sharing with you. So that's why you have to find your supply zone. Okay, next question. Can we use 1 hour or 2 hour time frame for LTF? Yes, you can use. I already explained in our training. Go to our training videos, supply demands and price action course in the phase 2. Probably lesson lesson 11.1 in this market dimensions and time frame I have explained. Please go through this lesson 11.1 and also look into these practicals. That is lesson 11.2 also. If not lesson 11.1, maybe it is lesson 11.2. Lesson 11.2.1. I didn't remember one of these, either lesson 11.1 or 2 or lesson 11.2.1. One of these videos, you will be able to find answer to this question. You can use 1 hour or 2 hours, but when you are using 1 hour or 2 hours, you will get a disadvantage. To overcome the disadvantage also I shown you the solution, how to overcome. Everything I explained. So there is no meaning in repeating the entire video training once again. I have given a complete details with examples and moreover with PowerPoint presentation with some kind of animations. Step by step I have explained. So please go through those lessons. Either lesson 11.1 or lesson 11.2. You will be able to find. Or lesson 12.1. Next question. While analyzing the GFC chart today, I observed a 15-minute supply zone within daily zone and there is no 75-minute supply zone. In such situations, is it this already explained. Seventh question only. Actually, we started our discussion from the seventh question. After that, we went into the fourth question. And then I decided to answer the remaining questions in this video itself. Okay, if your tool find many stocks of Nifty 15-year daily supply zone, then can we expect next day as a bearish? There is no strong rule that if the stocks are near supply zones, next day is going to be bearish. There is no such kind of strong rule, but one possibility is there. Why there is no guarantee? See, there is one more possibility. Next day, all those supply zones might be violated. If all the supply zones are violated, what happens to the market? Market will be super bullish. The moment all supply zones violated, market is going to be a super bullish. Because the moment supply zones are violated, people stop losses will be triggered. Then immediately to cover the short orders, people will start buying. And new buy orders will be placed, and because your stop losses are triggered, then market is going to be a super bullish. That possibility is also there. So that is the reason why you cannot guarantee that if all the stocks are, if majority of the Nifty 50 stocks are near daily supply zone. But there is one possibility that something is going to happen. But most of the situations, we can expect bearishness in the market. But sometimes, if the zones violated, whatever I explained, that will happen. There is a third condition is also there. Market also could be in a narrow range. All the stocks are in the supply zone, but at the same time there is a huge demand in the market. Some news has come, so people also started buying. So that means there is a fight between bulls and bears. The existing sell pending orders in the supply zones and the new demand, they keep on there are new demand is adding into the market and existing pending orders are getting executed. So what happened? Most of the day, the market will be moved in a narrow range. You will see a very small, only some 60 points move or 70 points move between high of the day and low of the day. The range will be there, or 80 points, 90 points. Imagine a 20,000 rupees index moving only 80 points, 90 points or 100 points. That indicates market is moving in a narrow range. That possibility is also there. That's why we cannot guarantee anything. Only thing is we can observe something like, okay, now markets are at the supply zone. There is a possibility we can expect some bearishness, but we cannot guarantee that. So that's why don't conclude. That's why previously also I told you in some videos, maybe tomorrow is going to be an interesting market. I never said tomorrow is a bearish market. Interesting means there something is going to happen tomorrow. We have to watch carefully. That's why don't take decisions just like that. It is only a clue, that's it. Nothing more than that. And the last question, what is that? Since Zerodha or any other trading platforms use TradingView chart, can we customize the time frames there are based on our requirements? Yes, you can use. You need not go for TradingView software. Previously also one of our members suggested, there is one, what is that? I didn't remember. Flyer. Is it Flyer? If I am not wrong, they suggested a broker Flyer. He is providing TradingView. There he can able to customize 75 minutes time frame. If that is the case, why do you want to waste your money by spending several rupees by paying? What is that? By going for professional package. If Zerodha or any other your stockbrokers are providing TradingView charts and providing 75 minutes time frame, because see, we need only two time frames needs to be customized. 125 minutes, 3 time frames, 125 minutes, 75 minutes and 25 minutes. Only these three time frames are not available in the free version. Remaining all the time frames are available in the free version. Just because of these three time frames, you want, but you can able to customize in some other brokers who are providing TradingView charts. Then don't go for TradingView paid version. Because they are using TradingView software, the data is same. I don't think there is any difference in the data. I hope I addressed all your questions for the last 1 week or 10 days. Because the last 1 week or 10 days I couldn't answer many of your questions. So that's why in a separate, that's why I'm addressing in this video. So now let us generate demand and supply zones. So starting from yearly, we will go up to 5 minutes time frame, one by one. Stocks near demand and supply zones. So yearly time frame, let us find the stocks near demand zone, yearly demand zone. Mostly you won't get. Even yearly also supply zones, stocks near supply zones. Mostly you may not find. Okay. Now let us look into half yearly. Stocks near demand zone. You may get one stock. Yes. And half yearly time frame, stocks near supply zones, you are getting one stock. UPL, is it? Yeah, got one stock. You know, stocks near yearly and up to quarterly, the changes will be very slowly. Probably the next 15 days or 20 days, you will get only these stocks only. Unless there is a huge change and something happened to that stock, huge momentum in that particular stock. Otherwise, you will keep on seeing the same stocks up to quarterly. Monthly onwards, you will see some changes time to time. And next one is quarterly time frame. Stocks near quarterly demand zone. Only one stock is there. Next quarterly time frame. Stocks near quarterly supply zone. So only one stock is there. Now let's move on to the monthly time frame. Stocks near monthly demand zone. Two stocks are identified, filtered. Let's go back. Monthly time frame. Stocks near monthly supply zone. Two stocks are filtered. Let's go back for weekly time frame. Stocks near weekly demand zone. These 5 stocks are filtered. Let's go back. Weekly time frame. Stocks near weekly supply zone. These 4 stocks are filtered. So let's go back to daily time frame. Entry time frame is daily. Let us find the stocks near daily demand zone. So 12 stocks are near daily demand zone. Let us see any high liquidity daily demand zones. JK Cement is there, which is a fresh zone. That's it. So we have identified only one high liquidity zone. So let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. 7 stocks are filtered. Any high liquidity supply zones? No daily high liquidity supply zones from this list. So let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. So this is the filtered list. So let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So this is the filtered list. Let's go back. 75 minutes time frame. Let us generate. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So 5 stocks are filtered, and high liquidity demand zones, we have only one high, but it is a pierced zone. So we don't have any high liquidity 75 minutes demand zone. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. 5 stocks are filtered. Nifty 50 is at high liquidity 75 minutes supply zone. Next one is Havels is a high liquidity supply zone. That's it. This is a counter trend trade setup. This high liquidity supply zone is a counter trend trade setup. And this one is the second high liquidity supply zone is a low priority on 75 minutes. Compare it to R underscore SZ. R underscore SZ is powerful than C underscore SZ. C underscore SZ is powerful only on quarterly, monthly, and some extent on weekly also. But daily onwards, R underscore SZ is powerful than C underscore SZ. So you should not forget that point. That's why when you are analyzing Havels, do your analysis carefully. But remember, this is a liquidity zone, but it is a counter trend trade setup. We are trending against the trend. We are trading against the trend. Anyway, you will fine tune at 15 minutes or 5 minutes level to minimize our risk. So let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes demand zone. So this is the filtered list. Let's go back. For 25 minutes time frame, let us find stocks near 25 minutes supply zone. So this is the filtered list. So let's go back. 15 minutes time frame. Let us find the stocks near 15 minutes demand zone. So these two are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. These 8 stocks are filtered. Let's go back. Next 5 minutes time frame. Let us find the stocks near 5 minutes demand zone. So these 2 stocks are filtered. Next 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. These 6 stocks are filtered. So these are all the stocks near demand and supply zones for different time frames. So let us all meet again in our next video. Thank you.